Peace, family. Now, today's message is in particular for Davy. So, shout out to you, Davy, for asking me to break down what really transpired in the market. We're going to look at January 20th and January 21st, 2026. And this is just a little market snapshot. We're going to break it down. We're going to go through it hopefully relatively fast. The full video is going to be on YouTube, so please go to YouTube for the full video. And please remember that my name is Keen Singh from the Splinter Keys, and this is educational content only, not financial advice. Please do your own independent research. Now let's get into it. Yesterday we saw the markets break down. The US market broke down sharply. Stock indices like the Dow, Nasdaq, S&P 500, they took their biggest loss since last quarter 2025. And it all struck because of tensions with the geopolitical war and trade tension. Now, the catalyst is our dear President Donald Trump. His aggressive tariff threats and his controversial push for Greenland is what rattled investors and triggered what analysts are calling the sell America trade. So when this happened, we saw gold soar to record territory, breaking 4,700 per ounce and even flirting near 4,900. So as capital fled risk assets, they headed into safe havens. And we've already discussed this time and time again on this channel, the safe havens tend to be gold, silver. Remember, gold is protection, silver is more productivity. So this isn't just a flash move. Gold has been carving out fresh highs as geopolitical uncertainty and policy risk have climbed. Now today, January 21st, markets initially cooled ahead of Trump's World Economic Forum speech, and the futures market on the S&P 500 and Dow was slightly lower before the bell. Stocks were trying to stabilize after the prior session selling, but yes, so where was I? I was saying to you that the risk on, risk off battle was clearly alive, right? Then Trump took the stage in Davos and he delivered his remarks. He delivered his remarks to the global audience, to policymakers, to CEOs, to the financial elites. Now, the key takeaways from Trump's World Economic Forum speech is that he ruled out the use of military force to take over Greenland, which is a major relief to markets because the markets feared that escalating. The president did touted that the strength of the US is at the hottest. Is at the hottest major economy and framed the US as a global engine of growth. He reiterated his trade and NATO grievances, and that kept risk sentiment a bit uneasy. Even as tariffs were temporarily backed off, it did make the market a little uneasy. So the market, of course, reacted. So after Trump's address, US stocks bounced back sharply. The Dow, S&P 500, and Nasdaq rallied back into positive territory as traders cheered. They cheered the de-escalation on tariffs and the more dovish tone of his speech. So that rebound doesn't exactly erase the underlying trend, but let's get into the big picture. You see, this still matters. Here's the big picture and why this matters. We're in a world where policy risk is market risk. Good? Now we understand that. When political tension dominates headlines, especially around trade, tariffs, and geopolitics, capital leaves. Capital leaves risk assets first. When it leaves risk asset first, what does it do? It seeks hard assets like gold. Now, gold continues to prove its role as a true market hedge, not just as a commodity, but a market hedge, hitting fresh all time highs, even while stocks gyrate on headlines. Now, that's a strong sign that mainstream participation is starting to price in structural uncertainty, not just short term volatility. Now, compare that to equities. We saw a sharp sell off, followed by relief rally. Now, that kind of whipsaw action tells you that sentiment is fragile. Driven more by headlines, that fundamental right now is, and the fragile markets tend to reward safe havens and hard assets, especially when geopolitical risk is front and center. Now, yesterday's the markets were so yes, yesterday the markets they were rattled hard too. Stocks sold off as geopolitical and trade tensions sparked, and gold surged to record highs as capital rushed to safety. Today, after Trump's speech at the World Economic Forum, stocks bounced back. They did. They bounced back and erased the tariff fears, and they felt a little more comfortable with a less aggressive tone. But gold still remains strong near new all-time highs. The message is clear. When markets get shaken by policy, capital finds refuge in hard assets. That's why gold continues to make new record highs while risk assets tend to show us that they're gyrating. So hard assets should stay in your strategic conversation, not just in your speculation. We've already seen that silver tends to move slightly lagged behind gold, but it tends to move higher. Say if it's a case that, you know, gold trading so high per ounce is not exactly your cup of tea, do know that we have other assets, baby. Now, please do your own independent research.